Hey everyone, it's Blair here at Time Trades. I hope everyone's doing great this weekend. Okay, so we've got a good update here in store. The Time Trades forecast has been really on top of this recent move down. If you haven't seen the video update from January 9th, highly recommend you go back and take a look because none of what has happened in the last couple of weeks is a surprise. At least to watchers of this channel. So if you've been with us for a couple of weeks, you will know that I called for a 10 to 20% across the board correction based on the Time Trades forecast on our video on January 9th. So go and check that out. It's kind of creepy, to be honest, how accurate that forecast has turned out to be. It's not always that accurate, but this time it is. So I hope you have been able to leverage that information for your own benefit and been able to make some nice profit from that. So let's start with a review of the indexes here. What we've got up is the Qs right now, and we continue to see lots of down pressure coming up, but there's still no pivot lows in the near future until kind of March-ish. But when looking at the indexes, one of the things I find is that the signals tend to be not quite as strong as individual stocks. So always make sure that you look at the big stocks that make up the QQQs when you're formulating an opinion here. So we also have a little bit of a hollow coming up this week in the down pressure. So often as the down pressure backs off, that can translate into maybe a counter trend rally. So that's something to be aware of. But let's take a look at the other indexes and see what we've got going on, starting with the Dow. And the Dow has also been very clear with this major pivot low February 4th kind of being very consistent for the last few weeks. And that's kind of driving, I think, a lot of my opinion. And I'm anchoring my opinion to this big pivot low. I don't think we see much of a lasting rally until we get down here. And one of the reasons that I discount slightly this one standard deviation up day, well, there's two reasons. One is the reduced probability. Okay, so this is a 37% probability, whereas the pivot low down here is a 63% probability. The second reason is that the one standard deviation moves are less accurate than the two standard deviation moves and less accurate than the pivots. So when you encounter potentially conflicting information like this, keep that in mind that that the one standard deviation moves, especially like isolated moves like this, tend to be less accurate than the other forecasts within Time Trades. So we still have another couple of days of down pressure forecast here with some small probability two standard deviation down days, like 14% and 16% on Monday and Tuesday for the Dow. Okay, now let's go and take a look at the spiders here. Spiders, again, we see this early February date pop up as an important date for this pivot low. So we see a reduction in the down pressure similar to the Qs. But again, this February 3rd, February 4th date keeps popping up. All right, let's look at IWM. IWM, full disclosure, I'm currently short IWM, and we've got two big pivots coming up, January 28th, and then a second, February 4th. Again, that February 3rd, February 4th timeframe is really important in the markets. So I think when we're formulating an opinion as to when these down moves may pause or enjoy a sustained counter trend move, it looks like IWM, SPY, and the Dow are all voting for this February 3rd, February 4th timeframe here. So as everyone else is kind of realizing that, hey, we're in a 20% correction, we're already starting to look ahead to when this correction may pause and reverse. So a couple other things to keep in mind during this time frame is if we look at, say, short-term waves, let's turn those on. So the yellow period here, the yellow line here, when that kind of declines back to zero and then starts to speed up, that tends to correlate with some lows. You can see what happened here the last time yellow declined and then speeded up. That correlated with a fairly significant low back in October. Okay, so yellow seems to concur with this late January, early February timeframe for a pause or even a temporary reversal in the downtrend that we are in. Okay, and the other thing to take a look at is the juice indicator. Now, juice tends to indicate an injection of energy into the market. And when it goes to zero, like it does here in early February, this is very unusual. It's going to be near zero for an extended period of time. And we can see how the juice indicator tends to correlate with highs. When you're in time trades next time, just turn on juice and scroll back in time and see how the spikes tend to correlate with up days as well as pivot highs as we get that injection of energy. So the juice indicator is a leading indicator of solar activity. Okay, so that's why I call it the juice, and that tends to align itself typically with green bars. And it also depends a lot on what else is going on in the markets at that time. But at the same time, in reverse, when you see extended periods of little to no juice, you can also see it correlate with low prices as well. So all of this is adding up to a potential, at least short-term bottom in the late February late January, early February timeframe here on the indexes. And let's go and take a look at Apple. Apple, of course, biggest stock on the planet in market cap, major contributor to all of the indexes. It's got pivot lows in late February here. So there's one other tool that we can use to try to anticipate when we think we might see a turn, and this is the time trades indicator in TradingView. So if we flip over to TradingView here, we can take a look at we have the time trades indicator on, and historically, the teal bars that occur roughly in the middle of the green periods, these will tend to align with major pivots. So if we go back in time on the Qs, we can see that in March 2021, teal lined up very nicely with a major pivot low in the Qs. Go back some more, and we had one of these double teal events where, again, lined up very nicely with a major pivot low in September 2020. And then, of course, the best example is the COVID low, where it basically aligned with the low of that flush down, maybe about 4 trading days early. Okay, so major pivots tend to happen in the teal period. So as we look forward in time, we can see the first teal is February 9th, the second teal is February 23rd. And if we go back to time trades, we can see Apple's pivot low is on February 23rd. So there's a whole kind of range of dates where we may see some pivot lows here in the indexes and the major markets. That date range is basically kind of late January through to, February 23rd when the last teal event happens. Okay. After that, we get some juice returning to the markets, and we're through the Mercury and Venus retrogrades, and hopefully we can see a nice sharp bounce once this major correction completes. Okay, so that's sort of the assessment there on stocks. So let's take a look at a couple of positions. Selfishly, I'm going to choose ones that I'm in right now. One of the things that myself and a few other time trades users noticed is that XLF has, and again, this is actually a repeat from February 9th. XLF has, and XLF, for those of you who don't know, is the financial subsector of the S&P, so it's the banks. It has a nice cluster of 2 standard deviation down days coming up Tuesday and Wednesday next week. So we asked ourselves, okay, how can we play this? And well, there's two major types of banks out there. There's retail banks, and then there's investment banks. And the investment banks have been really getting beat up lately. So Goldman Sachs announced earnings and got crushed. Let me just turn off juice here. So Goldman Sachs really got smoked last week, and we think there's more to come next week, or Time Trades does at least. So these are 2 standard deviation moves down. That's the red bars. So we're looking at an 80% probability on Monday, 41% probability on January 25th. That's a probability of what? That's a probability of a 5-day close to close move of minus 8.7%. So if you want to get a rough estimate on what that move could be, you can subtract 8.7% from the bar that is 5 days prior. So in this case, it would be 1, 2, 3, 4, 5. That close is 347. Subtract 8.7% from that, and you get a pretty quick and dirty price target on what we could see. Your mileage may vary, of course. It is the market. We don't know exactly where it's going to land, but we know the probabilities are on our side for more downside on Goldman Sachs. And also JPM, another investment bank that actually looks worse than Goldman Sachs. It's got it's got a 99% probability of a 2 standard deviation down day on Monday. And in the case of JPM, that's negative 8.8% from the bar 5 days prior. And then there's a few more down days here as well. So I like to be short these guys because they move a lot more than the retail banks. Wells Fargo, being a retail bank, was also showing some down moves in time trades. You can see how much smaller that move is relative to the investment banks, because of course the investment banks are much more levered towards the stock market as a whole, and especially the stock market going up. All right. So Goldman Sachs, JP Morgan are big components of the XLF. We're short, or I personally am short those heading into this week. Let's close off this week's call with a quick review of the world of crypto. If we look at Bitcoin, we can see here that it's kind of more of the same. I said on a video a while ago that I'm not really too interested in going long Bitcoin until March. We're starting to see some evidence of reduced down pressure here, but we're not seeing probabilities of any up days or pivot lows until the late February, early March timeframe. So I'm just being very patient on Bitcoin, letting this correction play out. We're going to see what kind of prices we have in late February and see what kind of opportunities exist there. All right, so if we look at Ethereum, again is mostly bearish to neutral. More activity is on the downside than on the upside. Again, just being patient here, letting this flush play out, letting the correction play out. But looks like one heck of a bull rally starting in late March and moving into the April and May timeframe in Ethereum. Litecoin is another one that is on the radar here. And again, very similar, super strong looking March and April for Litecoin. And that's complemented by a high probability cluster of pivot highs in May. So really excited about some of the opportunities on the crypto side in the medium term. In the short term, I'm just standing aside and letting this play out, and we'll see what prices are when the time comes. Okay, so that's it for me. I really hope that you're benefiting from these forecasts and that these are helping you become consistently profitable. I know over the last couple of weeks that I personally have been benefiting from these forecasts, and I hope that's the same for you as well. So as always, trade safe, apply great risk management, and good luck this week. We will see you at the next video. Thank you.